Hey, folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Monday, April 2nd through Thursday, April 5th, 2012 is sponsored by Realtic. Alright guys, so let's get into the mix today as we look at the markets here on the SPY. This is what happened last week. Here is Monday, Tuesday, Wednesday, Thursday, and Friday. And you can see it was a very, very choppy week in respect to volatility. Monday morning, we woke up to Ben Bernanke giving a speech and saying that QE3 was a very good possibility. The markets gapped up and ripped higher on that news. Ultimately, it was a short-lived rally. And this is something we're seeing more and more, how he comes out and talks, and essentially, as long as it's not a strong economic indicator, if it's more of a fabricated hot air type thing from Bernanke, the rally in the markets is very short-lived. We saw one day up, and then 2-3 days by Wednesday, we had negated the entire move and gone to gap fill. And technically speaking, that was a huge level, by the way. If you're an intraday trader, you're loving gap fills here. And again, notice this is the previous Friday close. Monday's gap up, run higher. Tuesday was a sideways sell-off at the end of the day. And Wednesday, we sold off, and by about 2:30, 2 o'clock in the afternoon, we hit official gap fill. Gap fill created a bounce. The bounce was tremendous, took the markets up a majority of the way here, causing it to only be a small down day, and then that was it on Wednesday. Thursday comes out with more scared kind of market conditions. The markets gap down. We see the sharp sell-off making new lows here, coming down into this area. And by the way, this area is a very important area as well. I want to show you why. Take this pivot low, extend it through, and you get the exact low of the market on Thursday. And again, connect this low to this low, and you get Thursday's low. In addition, if you go to the daily chart, the 20 moving average right here. So again, I mean, there's always a reason. Remember, if you're looking at charts and you're new to this chart game, there is always a reason why a stock or a market bounces at a certain level or goes down at a certain level. It's called just resistance support levels. All right? And again, this is the basics here at InTheMoneyStocks.com. This is the free video. If you want hardcore analysis, come take the 7-day free trial to the Research Center and the Intraday Stock Chat. Intraday Stock Chat is geared more towards day traders, while swing traders are more geared towards the Research Center. All right, we give swing trades, we give hardcore analysis, market guidance, you name it, you'll get everything you need inside the Research Center. If you're a 401k player, if you're an IRA player, if you have an individual swing trade account where you're just looking to make the ups and the downs and the market pay you. All right, in any case, Thursday we saw the 20 moving average on the daily kissed, and we also saw the trend line here extended out. That created the bounce, and again, the bounce was tremendous here. The markets essentially on Thursday putting in a low and reversing a majority of their gains. Again, we saw the same thing on Wednesday. Wednesday, we were still down decently, but the reversal was tremendous. You're seeing the buy programs, and this is something the market's getting conditioned for. And again, many people will call them buy programs from the Federal Reserve, buy programs from institutions, and they do start out that way, don't get me wrong. But it's a self-fulfilling prophecy at this point, and you must understand that. When everyone expects and sees these rallies every single day around 2:30 on a down day, they buy that market at that time if you're at your lows regardless. In fact, I did it on Friday with my members in the intraday stock chat. We had a beautiful sell-off, and I've noticed that on Fridays, the market will sell early and bounce early because everyone leaves right around 12 anyways. Right here at midday, I was done for the day. I went off and enjoyed the Jimmy Buffett concert here in Tampa. All right, tailgating a little bit, having a little bit of fun. I was done for the day. It's a beautiful day. Let's go have some fun. So I've noticed that early on Fridays, the sell-off is in the first hour, and then it'll go right back up. So we bought right here in the intraday stock chat and just enjoyed the float back up. I think I made like 25 cents on my first half, 50 cents on my second half of the SPY. If you know this stuff, you can make money. And the key is, most amateurs don't do this, but I'll tell you the secret. If you're going to play a low pivot, whether you're going to buy at 2:30 right here on Wednesday, if you're going to buy there, that's fine. If you're going to buy here on Friday, that's fine too. But you must always maintain a tight stop. One day it will not work. And that day, amateurs will get crushed. Pros like us that are buying will get stopped out for a small loss. No big deal. If we make it every single day and then one day eventually it doesn't work, okay, so we made $5 on the spiders over the course of a couple weeks on this play, and then you lose 25, 50 cents on one that doesn't work. Big deal. That's the nature of the beast. All right, and this is the discipline that must be employed for you to become a pro trader, pro investor, and make money in any market. All right, so that's what the market did last week, folks. What I want to do now is talk a little bit about the coming week. The coming week is going to be tremendous. What we're going to start to see, folks, is this is the preliminary week or two before earnings season begins, which is going to be very important. But this week we have a lot of economic data. Economic data will be full on, and it will affect the market. We've been noticing that economic data has been a little bit below expectations of late. I'm curious to see if that continues. In addition, there's a lot going on in Europe. I've heard, I believe the ECB has a report out, interest rates possibly. We have that to look forward to. We also have some more issues developing in Italy and Ireland and Spain. We saw riots in Spain last week going nuts. So there's a lot of stuff bubbling up in Europe that hasn't affected the markets yet, but we do want to pay attention as this market has kind of flattened out. And when I say flattened out, it's been volatile, but if you zoom out on the charts, folks, right from this pivot high here, you've basically just gone sideways now. In fact, you have a possible head and shoulders pattern as well. But bottom line is, here's your pivot high here. You go up a little bit, you go down a little bit, you go up, you go down. You can see how it's flattened out as opposed to, if we zoom out, I mean, the market's had a pretty direct move up ever since December. All right, so something we want to pay attention to as this market begins to kind of shift balance now and get into a different mode, in my opinion, of not so much vertical nature, but more choppy sideways nature. And this is where day trading actually becomes very, very good. Swing trading, you have to pick the tops well. You have to know the master levels. I gave out a couple master level trades last week, one on Google and one on Starbucks. Both are in the money already beautifully as well on their respective plays. And again, I give these out in the Research Center, folks. So it's the 7-day free trial at inthemoneystocks.com. I will open your eyes to stuff. I will open and blow your eyes away in terms of showing you things in this market to make money on. All right. Now, what I want to do next is go over a couple charts. We want to analyze some charts. I want to give you guys a head start. We're going to go to the daily chart. I'm not going to talk much about the SPY, but I want to look at some other charts out there that are of interest to members here and also people that are just watching this video to try to get some information and understand what exactly we do. First off, we need to look at JP Morgan. JP Morgan, let me put up the chart, is a key stock to watch in respect to the market. JP Morgan was up on Friday. It's no coincidence the markets were also generally up on Friday. Dow, S&P up. NASDAQ was down. Why? Because Apple had a nice sell-off. By the way, a lot of people thought window dressing was going to occur. And this is something I talked last week in the free video about and to the members about last weekend. And one thing I said was Apple is coming into the last quarter of first quarter 2012, so the last week of that quarter. And a lot of people are expecting Apple to run higher on window dressing. What I said was there's going to be a lot of rebalancing. So it's probably going to negate the window dressing, and you're going to have a net zero kind of net gain. And sure enough, if you look at Apple here, look at the first couple days of the week up, and the next you had a pivot high on Wednesday, and then the sell-off later. And that's rebalancing going on. So you have window dressing early, rebalancing later in the week. And net for the week, Apple was basically flat, closed at $599.55. Could be significant based on the fact it closed below 600. But bottom line is, if you want this market to dump out, then you need JP Morgan and Apple to go down. Apple will affect the NASDAQ and the Qs. JPM is the leader. The financials are the leader in the S&P 500 and Dow. All right, so that's what we're seeing there in respect to Apple. Beautiful sell-off. Going back to JP Morgan Chase, we'll cover this. What a run this stock has had. Take a look at the beautiful double bottom here from October, September to December, and then look at the run it's had. I mean, it's gone essentially from $28 to a high last week of around 46.5. Percentage-wise, that is a monstrous gain in market cap. Now it's kind of almost like Apple. Now, the one thing to pay attention to is you see this gap fill right here on JPM. There's a gap fill right here and a pivot high. Take a line, extend it out. Look at what you get. Resistance. So that's your short-term resistance on JP Morgan Chase. If you get through that level, you're going to be looking for, this is your double top. I don't know if you get through this level, to be honest. I'm skeptical that they can get this market up. I think the double top is almost too easy for people, and the institutions obviously aren't going to make it that easy on people. If you get up to here, everyone's going to be looking to short. I think people right here are a little scared to short, which probably means it's the right point to short. If you get up here, it's probably going to go a little bit higher, frankly. So this is just something we want to pay attention to. But what a move, ultimately, from these lows all the way up. on JP Morgan Chase. If we look at a couple other stocks out there, let's take a look at Caterpillar. Now, Caterpillar I have been short on and just rocking this trade, folks. This has been one of the better trades out there over the last few weeks to month or so that I've been in. I shorted Caterpillar right here. This is my exact short price, 116.05. Came down to the 50, took half off the table. Bounced, still in with half with a break-even stop. So my stop is right up here at break-even, right? So as long as it doesn't hit that, I'm going to ride that second half out. Had a nice bounce, made new lows, now got a nice bounce. But notice how you're making lower highs and lower lows. All right, now what I'm looking for is ultimately a target of 102-ish, 102.50 will be first target. And then ultimately I think it's going to go down here to this gap fill in the 200 moving average. And that's going to be at a price of 97 to 98 bucks. But again, when you're in the driver's seat after taking half off for a profit, you can just do whatever you want. As long as you have a break-even stop, who cares? All right, at this stage, to be honest, if we got back above these moving averages on a closing basis, I'd probably just take the profits and run at that point. You know, just noticing the chart, if it got back above, that would probably be a strong indicator, so I might as well just take it there. But bottom line is, I don't think it's going there. I think you're going to continue to see weakness on Caterpillar, and it come all the way back in. Again, right now, I'm about $10 in the money on that second half, which on Caterpillar being short in a market that is still at its 52 weeks highs is awesome. I mean, that's just king of the castle right there. And again, why did I know to short that level? Master level, folks. It was a master level. A little bit of a rounded top there, too, which is something I've talked to my members about in respect to the market itself. All right, looking at a couple other stocks here, we'll just take a look at one or two others. MasterCard continues to kind of just chop around these highs. I do think MasterCard is toppy in this upper range, but after pulling back last week, you got to wait for one more pop-up. If it gets back up above the 440 level, I think at that point it is intriguing to me, and I might be interested in shorting it. I will keep my members appraised. If I short it, I put out the alert in the research center as a swing trade. Any stock that I see that's going to be a good setup, I'm putting out to this week, and any stock that triggers that I short myself, I'll put out. In addition, folks, Hidden Gem. This is big. Hidden Gem. I haven't released one in a couple months because the market in terms of small caps have been kind of toppy. They haven't run as well, but I have found one. I will be releasing it Monday. Be ready for this, folks. This is going to be a monster. And again, 7-day free trial. You want to get it? Take the 7-day free trial. Ultimately, you're going to make so much money. We feel that you'll rock and roll here with us for years to come, as most of our members do. But bottom line is, Hidden Gem released tomorrow at some point in the morning session. Somewhere between 9:30 and probably about 11:30, 12 o'clock, I will release the Hidden Gem, which again is a small cap with a 50% plus upside potential in a matter of 6 months or less. We've had amazing runs. One of the small cap, I think it was the last one here, folks, was this stock here, SCEI, Sino Clean Energy. All right, I gave this out right in this lower range, right down here. I think I gave it out at $1.15 or so, $1.10. The stock went to $3.40. Think about the percentage gain there. I mean, that is awesome. And this next one should easily be able to perform almost as well. I'll give out the targets in the video and so forth. Alrighty, guys, enough said there. I am going to get back to studying the charts, prepping the Hidden Gem, getting everything ready to rock and roll. But again, this week should be fun. Watch Europe this week. I think Europe is going to be key, and the economic news in the U.S. should be very interesting. Continue to take the 7-day free trial here at InTheMoneyStocks.com. You'll get our key analysis. And again, let's rock and roll. Make some money this week. Take care, guys.